Welcome. There are several of you logging on. Good to see so many of you. Happy Monday. I am excited for this opportunity. We are incredibly lucky to have Anders CPA firm and advisors in our community. They are trusted sources and dear friends of ours. For those of you in Denver who don't know Anders CPA and advisors, we were participating in a competition back when we started, and they were our coaches. And we got to work very closely with them and meet several people within the community. Not sure who to mute. Let me mute all, and then I'll unmute. And so, when thinking about navigating this CARES Act and all the questions that I know I have and several other people have, I thought, how lucky are we to be able to have them here today? That, as you guys probably realize, everything is evolving rather quickly, and every day there's new information. So while they are going to share some wonderful information, things are continuing to evolve and change. So hang in there, and they will be great resources as we go. So we're going to dive right in. I have some questions that I have prepared, but then those of you listening, if I don't hit on questions that you have, feel free to chime in. Anders, team, do you want to start by introducing yourself?
Sure. I'm Jeannie D, and I'm a partner in our audit and advisory services department. And I personally work with a lot of not-for-profit organizations, but I've been working with our COVID CARES Act response team to try to assemble all this information for you all.
And I love that your background's in audit. I feel like that gives you a really interesting perspective on all of this.
I guess so, although I haven't had any audit questions. I haven't had a single debit and credit question in about 2 weeks now.
Oh,
So we don't call it busy season or tax season in my firm. We're calling it PPP SBA 7A loan program season. So, but yeah, hopefully we try to be all well-rounded advisors. And so it is an interesting perspective.
Yeah. And then Lori, do you mind introducing yourself?
No, I am Lori Ruckelmeyer. I'm a partner in the tax services group at Anders, and I work with a lot of small to medium-sized businesses, closely held, and individual income tax. So while this is, I guess, tax busy season, that's been the least of our worries this past week. It's been all about the stimulus package and everything that's going on. So I can't even remember if I looked at a tax return last week. But the good thing about that is that they've all been extended till July 15th. So we have time for that. But yes, it's been an interesting time.
Yeah, well, I appreciate you two jumping on. Like I said, for those of you who are listening, these are the questions I've compiled. It's by no means a comprehensive list. So if there is a question on there that I have left off, feel free to chime in. I will say one of the things I love most about Anders is that they're not going to bullshit us. If they don't know an answer, they're just going to tell you, we don't have that answer, because there's, like I said, so much evolving and changing that we're all in this together. So the first question I want to begin with is, what if a business doesn't have a bank? Many of us are thinking about what is the best way to go about applying for this. Is it true that the banks are only working with their existing clients, or how do you optimize this and decide where to apply for the PPP or CARES Act?
Okay, that's a great question, and we've been getting a lot of this question. Fortunately or unfortunately, the larger banks, and I can specifically name Bank of America as one example, they have stated that right now they are limiting to their own existing client relationships. Now, the reason they're doing that is that, frankly, the inundation of applications and questions and details and kind of working through all the forms and all the guidance is so great right now that some of these banks simply don't have the resources to open it up to non-customers. So it's not a blanket statement, though. There are likely some smaller banks, some other banks that are willing to work with non-existing clients and take on new clients. But it's kind of on a case-by-case basis. Right now, Bank of America has said while they have some other regulatory requirements going on,
You're
they are really unable to extend their program outside their own work.
I'm sorry to interrupt, but you're sort of breaking up. Lori, can you jump in there as her Wi-Fi's kind of struggling a little bit? And let me just piggyback and say one thing. You know, most of us have a business checking account somewhere. You know, is that the best place to apply for this, Lori?
Yeah, I think that's the best place to start because my experience this week has been while some banks are willing to work with people that don't have accounts there, they're going to start with their customers first. So if you already have a relationship with a bank, that is probably the best place to start. And if for some reason they're not doing the program or they're, you know, indecisive or something, I mean, hopefully they can maybe help recommend someone to you or, you know, like I said, the banks I'm seeing this week are, you know, Bank of America is pretty much saying no. US Bank is saying yes, but they're going to take their customers first. And some of the smaller banks I would think would be very similar, that they are going to let their customers, or they're going to work with their customers first, and people who are not their customers are going to be lower on the list. So I think, you know, it's, again, it's a bank by bank thing, which is what we're seeing about a lot of these things.
Yeah, and some are saying that it's better to wait for more clarification, but the question we're hearing a lot is, hold on, I'm gonna mute everyone. But the question I'm hearing a lot is, can the money run out? Jeannie Ann, do you wanna try your part of it?
Yeah, hopefully you guys, my internet's keeping up. So yes and no. I mean, everyone wanted to be first in line as soon as the applications were open. The Treasury Secretary has said this publicly, that they believe they have adequately funded this program. And if they need to, they're going to go back to Congress for more money. Now, you don't know what's going to happen 3 weeks from now. So we are kind of advising clients, you definitely want to get your documents in order. You want to make decisions. If you have a board that you need to consult with, you want to get everything ready to go. It's not a mad rush to be first in line anymore, especially because a lot of little things are changing literally minute by minute. But at the same time, don't be too paranoid that the money will run out. I would say if you're getting your stuff together this week, maybe even in the next week and so forth, we will continue to monitor that. The Treasury Secretary does intend to go back to Congress. And frankly, Congress has said they've got a phase 4 plan that they're looking at developing right now. So we're not done with the stimulus package. I think there will be future packages depending on how this crisis continues to evolve.
Yeah, I was sharing with them before you all hopped on that I'm a little type A. And so I had reached out to my banker way in advance, gotten the application, turned it in Thursday night, was all proud of myself. Friday morning, I got a message from my banker saying, yeah, you have to start over. The application got changed as of 11 p.m. Last night. So I appreciate that you're saying that it's evolving and changing and that there's no perfect solution there. Do you want to jump on that? Lori, do you want to add to that or you want me to move on to the next question?
I think you can move on. I think Jeannie covered that.
Okay, great. You know, as a small business owner, I'm hearing a lot about forgivable loans and, you know, this much is going to be forgiven and this much isn't, and all these things about pay. You know, obviously the number one thing going through my mind is if I take this money, when am I going to have to give it back and how much of it am I going to have to give back? You know, because already being nervous about cash, those are the things going through my mind. So Lori, I don't know if you want to jump on that at all about like when we're going to have to pay this back or anything, you know, regarding the loan.
Well, I'll let Jeannie kind of chime in on the exact logistics. I think from my perspective, the one thing I want to add or say is that even if you do have to give some of it back, and Jeannie will kind of elaborate on that, it's a great loan still, you know, so I think you just have to keep an open mind about it and do the best that you can. But Jeannie, you want to elaborate on the exact stipulations of the loan?
So a couple of quick points on that. They did, so the loan cycle is a 2-year loan cycle. The first payments are going to be deferred for 6 months. That's for everybody. The interest rate had been changed. It did change from 0.5% to a full percent Don't ask me how that got into the final interim regs. Nobody kind of knows. The goal of the program is for these to be forgivable. And that's a big deal right now. It's a huge part of the program. The underwriting criteria are completely different than traditional loan underwriting criteria. So they're not looking at a cash flow type thing. This program is designed at the top level to get money into the economy now before we fall deeper into a recession. So they're not supposed to be gotcha loans. They're not supposed to be, you know, you find out 5 months from now you didn't cross a T or dot an I and it's not forgivable. That's not the intention. And everything we're hearing from the SBA, from the banks, from the Treasury is consistent with that message. The goal of the program, if you do utilize 75% on payroll costs, and the other, that's the threshold that I've seen thrown around. I don't know exactly what document that threshold is in, but you need to be utilizing the money for payroll, mortgage interest, rent, utilities, all those things that are outlined in the application materials and in the regulations. Your loan should be forgiven. I mean, that's the goal of the program. But I think, as Lori said, 1% is pretty cheap. You can't get that on the regular market right now, even in today's climate. So go into it with a good faith usage of the funds, and the SBA and the Treasury are going in this with a good faith. This is what we're going to provide for the American economy right now.
Right. You know, before the PPP became available, there was is it the EDIL, the Emergency Disaster IL?
An injury, yeah. Injury loan, emergency disaster injury loan.
Yeah, and about 3 weeks ago, I was trying to fill it out, and it was quite extensive. It was confusing. I was struggling. There was information on there I didn't feel comfortable sharing due to just business agreements that I have with people. And so I found it interesting that more recently I got back on, and it's a very different application. I don't know if you guys want to get all to
that program still exists. Right, that program still does exist. The EDIL is another piece of the CARES Act. So if you are for some reason not eligible or not interested in the PPP, you could still take a look at the EDIL. Our people have told us the EDIL is a more complicated loan structure. That's the emergency disaster injury. Those have been in existence for a long time for hurricanes and for flood situations and so forth. Now you get into the inner workings of the banking world and how one program is supposed to fund and pay off the loans of the other. I don't really know all of the mechanics of that, but for those organizations that can't or don't want to participate in the PPP, you could look at the EDIL. They're still there, the whole separate section of the CARES Act.
Yeah, and I applied, and there's that $10,000 amount that supposedly can come to you. I have yet to hear anything or see that 10K, but that is the word on the street I'm hearing. And so hold on, let me go back on the script. In terms of, so with the EDIL, you could just go on and apply. You're not going through banks, where this PPP, you are going through banks. So I'm curious, if you're going to go through a bank, what kind of fees or things I'm going to have to potentially pay to my bank for that PPP? Who wants to take it?
There are no fees associated with these, and there's not going to be government imposed fees, or I think bank imposed fees. I think it's going to come down to if you use an agent to complete the transaction, there could be agent fees that are paid out of the loan proceeds. Lori, I'm not as familiar with that nuance. I don't know if you have any other.
Not really. I mean, I've kind of seen the same thing. You know, there's no fee to you up front for applying for the loan or getting the loan. I mean, the banks are going to get paid somehow in the background, you know, via the government or the SBA, as they would with a lot of loans. But yeah, there may be an agent fee depending on how that works, but I haven't dug into the nuances of that either. But for the most part, I think it's not a fee that you're going to pay per se.
Yeah. Now, when thinking about going back to applying for this loan, is there any kind of collateral or personal guarantee that they're asking for that is required? Because I know that's a scary thing as a small business owner.
Right, and that's again part of this program. Now, remember, when they implemented this, when Congress passed the CARES Act, they took the existing 7A loan program and modified it in a lot of different ways. One of those modifications was the collateral personal guarantee. It's our understanding that those are not required because again, the underwriting criteria is very, very different. It's not based on a cash flow projection. I don't really know what the underwriting criteria exactly is, but it's not based on the old traditional 7A loans. So there should be none. I've had some not-for-profits ask me that same question in terms of, is the board of directors ultimately responsible? I think we'd have to look at, we're tap dancing on some legal questions, but my understanding is that there's no collateral or personal guarantees required on this PPP 7A loan.
Yeah, the application.
Lori,
sorry to interrupt. The application was really straightforward and didn't really ask anything about my own personal finances. So I was happy about that.
Yeah, it's my understanding there's no personal guarantee, which is different from the EIDL loan because that's an SBA loan, and there is going to be a personal guarantee involved with that, just like there is any SBA loan. So that's one of the differences between the two. But yes, as far as my understanding, there is no personal guarantee.
Yeah. Now, it seems like there's a lot of confusion about the eligibility of independent contractors. The one thing I found confusing when filling out the application is you had to come up with this amount, this average monthly amount, and then multiply it by, I believe it's 2.5. Don't quote me. Hopefully, correct me if I'm wrong. But trying to come up with that exact number was quite challenging. And then, I have staff, both employees, part-time, full-time, part-time, and additionally some independent contractors. And then I know some people on the call, they themselves are considered independent contractors. It looked like that was not a question I decided to answer, so.
I know where you're going. Okay, everybody, here's the deal. This is one of the most unsettled pieces of the entire guidance right now. We do not have a clear answer. If you would have asked me the same question, I guess 4 days ago, I would have said, oh yeah, clearly independent contractors count. And then 5 hours later, no, they don't. And then 3 hours later, yes, they do. And it continues on like that until we get to today. We still don't clearly know. At one point, it seems there is direct contradiction in the actual interim final regs. They're actually called interim final regs, by the way. I don't know what interim final means, but anyway, the implementation guidance, and Congress didn't write this, okay? So Congress wrote the law, the 900-page CARES Act, but then they leave it to the Treasury and the SBA to actually write the implementation guidance for how the SBA is going to administer this. So, and that's where the devil shows up in these details. We were thinking that if 1099 contractors are integral to your business, right, that we should be including those because that's loosely in the eligible compensation piece. Now we're starting to think it's mostly a head count computation, but those actual dollars are probably not included in the calculation because they can go off on their own. Self-employed individuals are allowed to be part of this program. So they can, as self-employed, go off and get their own loan for their own business. So it's just not clear. We are continuing to look at this and try to get guidance. And we're having an updated conversation on Wednesday where we hope this gray area will be more resolved. Our recommendation is work with your banker to try to answer that question.
Now, you said you're going to hopefully have updated information on Wednesday. What time and how could someone jump on if they wanted to have this follow-up conversation?
Well, Anders is hosting a webinar. We had a webinar last week when all of this was, after the CARES Act was first announced, and after we had some time to sift through it. We're going to have an update on Wednesday at 10 a.m. and you can register on our website. And if you want to email Stacy, she can get that to us too, and we can give you a direct email link, I'm sure. Donna's on the phone too, but
And we have more
if I
questions.
missed something.
Yeah, we're not leaving yet, but I just wanted to make sure I got that out there.
Okay.
A question was sent in, and if I'm being honest, only half understand it. So as you answer it, if you can also clarify some language. It says, are there any associated debt covenants? So first, what is a debt covenant? And then are there any associated with that?
I might kick this to Lori, but a debt covenant in general means, hey, in order to get this loan, I have to maintain a certain amount of working capital. I have to maintain and that's very common in lending, right? You know, certain businesses are required to maintain certain cash flow projections or et cetera, et cetera. Lori, I'm not sure, but I don't remember any specific covenants in these loans in my reading. That's a good question.
Yeah, I've seen nothing related to the PPP. I can't even say it. The PPP loan of any type of debt covenant. I mean, they're trying to give this money away, as Jeannie said. I mean, they're really trying to make it as easy as possible, which is not the nature of most lending, but that's the whole reason behind this. So I have not seen any debt covenants related to this particular loan at all.
Yeah, and just I have two more questions, and then RISE members, if Anders won't kill me, I might allow for some questions. So be thinking about if you have a question, and I will apologize in advance for putting Anders on the spot because like they have communicated, this is ever evolving and they're doing their very best. But let's see. So much of the CARES Act has been centered around the PPP and SBA loans. What other parts of the act should I be considering or thinking about?
Well, I'll start with this. First of all, we already talked about the EIDL, which is a completely different program. There is the payroll tax credit. Now, the nuances of the tax credit are a little complicated. You had to have seen a 50% reduction in your revenue in the first quarter of 2020 compared to 2019. And those are mutually exclusive to PPP loans. So you cannot take advantage of both aspects. You can't take advantage of a PPP loan and then get a payroll tax credit.
Okay, so those those are two separate things. There's a payroll tax credit and there's the PPP, and those cannot both be done, but the EIDL and the PPP can be done.
Yes, and my understanding is yes.
Okay.
So furthermore, the CARES Act did a lot for individuals, and we have on our website, we have an entire blog that's, elements of the CARES Act. This is where you're getting your $1,200 checks from the government over the next, however long it's going to take them to disperse those. There were some changes to the old Tax Cuts and Jobs Act from 2018. There were a couple little provisions in there for some depreciation, some other things that they went ahead and fixed while they had the statutes open. We have a new above the line charitable deduction for $300. Not a lot, but if everybody can take advantage of that, not just itemized people who itemize on their taxes. There were just a whole handful of other little nuanced things that came through the CARES Act that are relevant to either individuals. On the business side, I think we've covered many of the big things. There's probably a few other nuances in there that may be relevant, and you can get that on our website as well. We've got sort of the, what's relevant to not-for-profit organizations, what's relevant to small businesses, what's relevant to individual taxpayers. So we've got all that material on our website.
Cool.
Lori, do you have did I miss anything on that?
I don't think so. I think that pretty much covered it.
Now, RISE members, I love seeing so many of you on the call today. It's great to see some of your faces and just your names for others of you. I want to make sure that we craft and create this conversation around questions and things that you have for us. So I'm not sure the best way to do this, but just wanted to see if anyone has a question. Or just wants to say hi. Cindy, I see your beautiful face. Do you have any questions? You're good? No questions? No questions. Anyone else?
I'll ask a question. Sorry. I turned off my video because I was eating lunch, and I don't know what the etiquette is around eating while you're on a Zoom call.
We're all learning. I'll tell you what, I will say Mari, who's a member at Rise Denver, did a thing on LinkedIn. I saw a post about her showing all the Zoom etiquette. So if you follow Mari on LinkedIn, I watched it and I was like, oh, this is really interesting. I don't know if she talked about food though.
Okay. And I was heating up my food at the first few minutes. So if you said this already and I missed it, I apologize. But I'm curious if businesses use it for payroll coverage, are they also supposed to not fire people? Like, is the point that, like, is there a restriction? Like, if you get this money, you can't lay anyone off?
Well, that's a great question. And it is really the entire crux of the program, right? You need to maintain, a level of salary the average salary that you've maintained in the past. So a decline in that number could result in a portion of it not being forgivable. Again, you need to work with your banker on the underlying nuances of all of that. But the goal of this program is to keep people employed and keep them on your payroll. That's what it's going to fund. These loans are designed to fund exactly that. Does that make sense?
It does. My company laid off about 40% of our workforce last Thursday afternoon. And I believe that they are applying for this loan, and I wonder if the timing and when they issued those layoffs is related.
Yeah, and Lori might be able to jump in here too. I don't know how that works. You can bring those people back and bring them back on your payroll rosters. There is some provisions in the actual the interim final guidance on how that timing works. Because a lot of people did, before they even passed the CARES Act, there were layoffs going on in mass, simply because they had to. Companies were shutting down their doors. So, but there is some provision on bringing those people back in and getting those payroll cost levels back up to where they were. Lori, have you had any direct experience with that with your clients yet?
I have not had any direct experience yet, but that's my understanding also, that if people were laid off, there's the opportunity to bring them back. And again, that's kind of, like Jeannie said, the crux of this whole thing. It's, because you didn't know what was going to happen then. So in some instances, you didn't have a choice but to lay people off. And so I think the goal of this is, if you're willing to bring people back and find things for them to do from home, or however that works. The idea is that you bring them back and they get paid, and then most of the loan would be forgivable.
And I feel like, again, this is probably terrible of me. I feel like somewhere I read something about the date June 15th. I know that's so random, but I feel like there is a date out there about talking about as of when. And good news, I think it was Meredith, your idea. We are bringing on an employee lawyer for Thursday who can dig more into the law behind employment, unemployment, all of those things. I don't want to put Anders, a CPA, an advisor firm, on the spot for unemployment law questions. Ria, one of our members, oh, sorry, I probably shouldn't have said your name, Ria. I love you. I apologize. But one of our members said, for the PPP loan, what is the loan amount based on? A certain number of months of payroll? Yeah, can you go more in depth the equation? I know I briefly mentioned it, but for those people who are not familiar, can you go in depth with the equation?
I mean, in the simplest terms, and again, I'm not going to get into the because there's some devil in these details as well. But it's basically your average monthly payroll costs for 2019. It's basically, you find that you take it, divide by 12. It's 2.5 times that number, up to, I think, 10 million. So now keep in mind, there's a couple caveats in there. You need to exclude payroll costs for individuals that are above $100,000. You can go up to $100,000, but if you got somebody making more than that, you have to exclude the portion that's above that. There is some controversy about net payroll versus gross payroll. You'll see if you get into some of these details, Our American Institute of Certified Public Accountants has written a white paper on this, and they are advising gross payroll, which is the only number that makes any sense to anybody. So this concept of a net number is a little bizarre to all of us. We don't know where that came from or who's interpreting that. But I feel very confident in the AICPA's analysis of that. So yeah, basically to cut it down to the most simple terms, it's 2.5 months of payroll costs. But again, look at the forms, look at those calculators, and work with your banker to make sure that you're providing the right application material. Most of the big payroll providers, by the way, already have a report ready to go. If you ask them for this, the ADPs, Paychex, Paycom, all of those big payroll providers, they've been working on this for a week now, and they're ready to give you that report so that you can easily get that application material into your bank.
Or your accountant. I also reached out to our accountant. And Jen, I see you. Yeah, Jen has had her hand up and patiently waiting. I apologize, Jen, that I jumped to Rhea first.
No, you were perfect, Stacy. Rhea asked before me.
Okay.
What are some considerations then for filing 2020 taxes when thinking about taking on loan relief or signing up for any of these programs?
I saw a cringe.
Lord.
Well, I mean,
Might not be a question that's fair, but we'll, so feel free to say no.
my gut is, well, we don't even know what 2020 looks like, and this loan being forgivable should have nothing to do with that. I mean, I guess we won't know by 2020 if the whole thing's going to be forgiven or not. I mean, that's to be determined down the road, I think. So again, I don't know what's going to happen for 2020. I wish I had a crystal ball and could tell you that, but I think there are going to be lots of things that may change for 2020 once this is all said and done. But knowing what those are virtually impossible. I mean, we can't even get 2019 filed now. So I mean, it's hard to say what's all going to come down the pipeline for 2020.
In 2019 has.
I will tell you, the loan forgiveness is not a taxable event. We do know that. So that's at least one good thing. And I think Lori hit the nail on the head. It's weird if you're self-employed. Your second quarter estimate payments are now due before your first quarter estimate payments, because your first quarter estimate payments aren't due until July. So,
and what I did read this morning briefly, and don't, I guess, take this verbatim, but I think a lot of people with regards to the stimulus check are not filing their 19 returns because maybe they want it to be based on 18, because maybe in 19 their income is higher and they're like, oh, I won't get the stimulus check. What I came across my desk this morning was a blurb that will all be reconciled on your 2020 return. So it could be that if if they send you money based on 18, when you file your 2020 return, it could be reconciled and you may not be able to, have the full credit or may have to pay part of that back. So that's again been a question I've had a lot of, and I really didn't have a good answer for that, but I did see something come across my desk this morning that indicated that would be reconciled somehow. Now, if they keep moving with that, who knows, and how that will all work and what it'll look like is yet to be seen. But that is just something to kind of keep in your back pocket, that it's not just because you don't file your 19 return by the time you get your stimulus check doesn't mean that it's necessarily going to not be accounted for.
Okay, one last question, and then I should probably let you guys go. I know you guys are busy, and thank you for letting us throw ad hoc questions at you. Someone says, I'm confusing myself on the forgive amount. Is it the loan rate that can be forgiven, or is it the potential part of the total money being loaned for the PPP? Is that determined yet? I think they just would like some, and you mentioned it, but if you don't mind saying it one more time, some clarity around the loan forgiveness. Because I also I remember at one point I felt like the whole darn thing was going to be forgiven, and I was pretty thrilled about that. But since my biggest expense is on leases, not people. Mm-hmm. And so when I saw that come through, I was like, score, we can get money, but then it will be forgiven because I'm going to spend it on a lease. And I'll be okay. That's not sounding like the case anymore. So if you could clarify on the PPP, the forgiveness, or as it stands today, maybe. I know that things are evolving.
Yeah, it's a good question. And this part, so, I mean, directly from the SBA, the expectation is if the loan will be fully forgiven if the funds are used for payroll costs, interest on mortgages, rent, and utilities. And they're stating that due to the high subscription, at least 75% of the forgiven amount must have been used for payroll. Now, again, that's coming directly out of the SBA's final interim final regs. So we have to take that for what it currently says. I mean, the goal of the program is to keep people employed, get money into the economy now, get money moving, because it's not moving right now, and we need it to be moving, and to keep people on payroll rosters. So it is truly a stimulus package. It's not intended to be any sort of gotcha. It's not intended to be any sort of like 6 months from now, we're going to look back and we're going to change our rules and regs and then pull the rug out from underneath these businesses. It has been frankly promised by both Congress and the Treasury that this is the way that this is going to be administered. So we have to have a good faith attitude, I guess, when we're going into this. That's what we know now. If we learn something about the forgiveness feature that surfaces during the process of all these applications, if banks start coming back and saying, well, hang on a second, we keep seeing this nuance and we think that's going to cause a problem 6 months from now, obviously our firm is going to monitor that really closely and try to get that information out to our friends and our clients as fast as we can.
Yeah, thank you. Well, I just wanted to say thank you again, Anders, and both of you I've known for several years, even before we were open, and we love having you in our family, in our community, as trusted advisors. So thank you so much. Of course, I sprung this on them on Thursday or Friday of last week. It was very short notice, and Anders is just always willing to step up and support us. And it really means a lot. And I'm sorry I sort of put you on the spot and went off script, kept you on your toes, but we just really appreciate it. And again, if things change on Wednesday, you will be on a Zoom again, and then anyone is welcome to jump on and be a part of that.
Absolutely.
Thank you, Stacey. Really appreciate talking with you guys.
Yeah, absolutely. Good seeing you, Rice family. Enjoy your day.
Bye.
Bye, everyone.